We're going to do a weekly analysis of the S&P 500 for the week coming up of November 14th. That's S&P 500 with technical analysis. We've got a daily chart here for you. We're going to show you a daily, a weekly, and a monthly chart on here real quick. Let's take a look at this. You can see we put in a huge rally here Thursday and Friday on the S&P 500. We're firmly approaching this 200-day moving average in blue. It's currently showing about 4,085-ish, and the price for Friday went all the way up to 4,009. So above the 5-day, above the 20-day moving average, but below the 200-day moving average. There's really no resistance until we get here at about this 41.75. So there's nothing keeping it from coming up here and challenging. Now, it's overbought. I expect it to fall back down here to the 3,900 level. Probably going to do that by Wednesday of next week. Then it needs to consolidate. It needs to stay above the 20-day, above the 5-day, and then press itself forward probably into not this week but next week and take this 200-day moving average out if it's capable of doing it, basically closing above it. You can see the last time it tried it here on August 16th, it bounced off the bottom of it and just headed right back down. That could easily happen again. We're getting overbought big time here, so you know I'm projecting a sell off down here to 3,900. It could be down here to 3,850, something like that next week, and it may take a little longer, maybe towards the end of next week. But I do think we're going to get a sell off first if we expect to get through it. If we try to get through it here, it's not going to happen. So if we get a sell-off and get some backing and filling through here and take a week or so to do it, maybe a week and a half, then we might have a much better chance. This is what you need. You need this backing and filling through here. You need solid support of the 20-day or respect for the 20-day moving average, and then you have a chance. You can see you got all of that, but it bounced off the bottom because it was in a deep decline at the beginning of it. It's still in a deep decline. It's slightly, I wouldn't call that flat, but it's slightly beginning to reduce its slope down, but it's still in a deep decline. So this was a sharp bottom, not necessarily anything to matter with that. A lot of stocks put in a bottom that day, but this S&P is not necessarily in a good position to get through this. Let's take a look at the weekly chart. And getting through that, of course, means getting out of its bear market. Now, this is a weekly chart. We can see we got decent respect for the weekly. We got much better than we got back here in March of 2020. We went through it and went right back out of it again. I'm not sure that we ever even closed below the 200 week. If we did, it was right on it. But we now closed above the 20-week moving average, which is really good. However, our green 5-week moving average is still below the 20. So on a weekly chart, you're in a bull market, or at least not in a bear market on a weekly chart for the S&P 500. However, you have lower lows, lower highs. If this turns around and goes down here and closes below this high, doesn't make a new high and closes below this high this week, then really you have a danger of coming back down here to 3,400. So you have to look at it that way. You have to look at the exact opposite of what you hope, what you think. This green has got to get above that 20-week moving average. Even if it gets above it, it might be a false breakout like it was here. So what you're looking for, and it's hard to believe, but we got to go back here, get the green above it, stay above it. So now you have blue, red, green, rally. That's what you're looking for here. Blue, red, green, rally. And so we'll see. It's very, very, it's iffy in my opinion. This is a negative looking chart. Let's take a look at the monthly. Shows us anything different. This is a monthly on the S&P 500. I would not say this is a negative looking chart at all. Here's your 200 month, here's your 20 month, and here's your 5 month. Yes, it is below the 20 month your 5 month is here. It's between the 5, the closes between the 5 and the 20, but I wouldn't say this is a hugely negative looking chart in my opinion. I mean, I just wouldn't say that. So I think that if we can continue on this chart to get a slight little rally, some backing and filling, and then in a couple, maybe 4 or 5 months, work our way up here, you might have a chance to get above this red 200 month moving average. But this is a much longer term situation. This is good news is this isn't a hugely negative chart. There's some people that would tell you this higher high and lower low isn't, amounts to something. I don't buy into all that. The reality of it is this isn't a negative chart, and it could easily go either way, but I don't think it's negative. This I think is a positive chart, but we have to back and fill a little bit, get this 5-week above the 20-week, and then move on. Who knows if that's going to happen, but that's what's got to happen to escape this bear market. Because even if you get a rally above and close above the 200 day moving average, your weekly chart's got to look good or it's just going to break down. So that's where we are for the S&P 500 for the week of November 14th. Let's see what RBAM research says about it. We have algorithmically generated prices in several places. Let's first look at trend following. Down here we've got a 30-day trend following system for the S&P 500 for tomorrow the 14th, and it shows flat, which is really interesting. It's all for entertainment purposes only. Can't use it for anything other than entertainment, including my commentary and the entry prices, but it does show flat for tomorrow the 14th. Let's go and see what the algorithmically generated entry prices for S&P 500 look like for the 14th right here. It's got shorts at 4,014 for 2, 5, 10, and 20-day periods. The 4,014, and then for the 20-day, 4,006. So it's showing shorts across the board for tomorrow the 14th for the S&P 500. This is the E-mini futures contract, which is the most liquid futures contract for the S&P 500, one of the largest in the world. Again, we're showing flat for the trend following. It's a 30-day trend following system in tomorrow, assuming your own analysis says it's a good idea for hypothetical purposes only, and then hold 30 days, get out of the loss, or take your profits sooner. And under that system, this is showing flat. And these are all intraday systems, intraday support and resistance for day trading S&P 500 for tomorrow. And you can get all of this at our website. Some of those are subscription only, but you can get them all for free to take a look at rbamresearch.com. Link in the description below. No credit card required. You can get a 2-week subscription to check them all out for free. 190 stocks, the major forex pairs, the most liquid futures contracts, including the S&P 500. Crypto's been suspended now for a little bit until the crypto market straightens out. Everything's updated by 7 a.m. the morning of. Keep in mind, trade at your own risk. Do your own analysis. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a ticker symbol you'd like us to do a video on, please leave it in the comment section below and we'll consider doing it.